I am Dilan De Silva. I work as a business broker and a real estate agent for tourism properties. My job is to sell tourism businesses, and I used to be a hotel general manager before. So this is my background. This is what I do. In this video, I'm going to share some tips of how you should prepare for a sale. For example, if you're thinking of selling your business next year, here are some tips of how you should prepare for this sale. And remember to watch this video until the end, and I'll make sure that you know exactly what to do. These are some valuable tips. Let's get right to it. One of the first things you need to have ready is your financials, is your year-end financials, or I would say 5-year financials. I have other videos of, how to run a sale-ready business. That will give you some tips on how you should run the business so that it's sale-ready. Finances are a key factor when you're selling a business. It's not like selling a house. Your numbers do matter. It's all in black and white, and there are certain multipliers, there are certain indexes, there are certain percentages people use to value your business. So having them ready, having them clear is a must. So please ensure that your accountant gets ready with your year-end accounts, or if you decide to put your property into the market in October, which happens, most of the time. People put properties in spring, in winter, in summer, any time of the year. Just make sure, in addition to the last year finances, you get an up-to-date financial report from your accountant so that the numbers are clear. This is what people look at, so this is number one. The second most important thing is have your business or revenue segments identified and ready. Now, this is a mistake done by most businesses, and I have sold 47 businesses in the last couple of years, so I really understand what's required from a buyer or what the buyers are looking for. One of the key mistakes organizations or small tourism operators make is that they don't have the proper statistics of how they generated the revenue. I mean, for an example, if you're running an accommodation business, you need to understand clearly, or you need to have a record that clearly shows what's the business that came from third-party channels like bookings.com or Expedia. What's the business that came from corporate or repeat clients? What's the business that came through walk-ins? Most of the property management systems you use would give you access to cluster this information. It's a bit technical how to program it, but you can always ask for some special training and make sure that these segments, these bookings are identified differently. If you're running a food and beverage operation, make sure your food's separate, make sure your beverage is shown separately, and all these would make the cluster of revenue. This is so that people understand, buyers, potential buyers understand, this is how the revenue was made. These are the clusters that's involved. These are the moving parts that's involved in getting that number. It's not a number which came off from somewhere. And of course, the more information you have, the more breakdowns you have, you look professional as an operator, and the potential purchaser has more confidence in the business because you kind of know what you're doing in the business. We talked about the finances, then we talked about segmenting your revenue. The third thing is you need to segment your costs, or at least your key cost structures need to be broken down so that potential purchasers can understand. For an example, you could be having an accommodation business and there is housekeeping and front office staff in that business. You need to break that down because maybe the potential purchaser is going to run the reception by themselves, so they can understand that there is a saving there. So break down all or significant costs in an accommodation business. If you're running a food and beverage operation, just ensure that you have your food cost and beverage cost shown separately so that potential purchasers can understand those cost segments. The fourth thing is evaluation. It's always good to have an external business valuation. I mean, it's going to cost you a bit of money, but it always gives you a good indication of where you can price your property, and it also gives the purchaser a good indication of what's it worth. So it's always a good thing to have a business valued or a valuation done before you sell a business. If you're selling land and buildings, there is 2 reports you should consider. Most of all, you need to get a limb report from the council. You should order it about 30 days before you are prepared to list the property. By having a limb report, the potential purchasers can identify what's required in a property. It's very similar to buying a house, for an example. The next report that's needed if you are selling your land and buildings is an engineer's report. Now, this is a bit of an expensive report to get. However, if your buildings kind of old, or it's been through earthquake damages, it's been through a few issues, this is a very important report for you to get and have, so that potential purchasers can have information at hand for them to make decisions. And if you're setting a lease business, your lease instrument and the other documents pertaining to it. Providing this information beforehand shows professionalism and gives you a lot of buyer confidence, because they know by doing this you have nothing to hide. I am Dilan De Silva. I'm a business broker for tourism properties. I usually post videos every mid-month, so keep an eye for them. I pass information like this which are relevant to tourism and business operators in terms of real estate and in terms of running their businesses, I would say. So please remember to like and subscribe my videos if this video was helpful to you, and keep an eye for the new videos to come. Signing off, Dilan De Silva from Tourism Properties. My contact information is below if I can be of any help. Bye for now.